unlimited amount of capital ready to come at it when they get compliance infrastructure, when they get policy.
Hello and welcome. This is the Daily Crypto. We are joined by Kevin O'Leary to discuss the future of Bitcoin and the need for regulations. He's going to reveal some very interesting facts which might help you in planning your crypto portfolio, so make sure to watch until the end.
Crypto and data centers are on the mind of every state. It's gone from nowhere in their policy making to top of the agenda for a bunch of reasons. They're watching what's happening in D.C. with bills from Lummis and Haggerty and Toomey and the discussion on stablecoins, all of that stuff. But the granddaddy asset is Bitcoin. And so what they're asking is, okay, let's just talk about Bitcoin mining, for example. So Bitcoin mining is controversial because of the ESG mandate and the concern about using too much coal-fired electricity to mine that into coin. And I pointed out to them that there are states that have assets that allow you to do it on a clean basis and build data centers, and states that don't. And so let's take the case of New York City. There was a big project going upstate New York about 3 years ago. It was going to be one of the world's largest clean data centers that was being built behind the meter, which means direct power from Niagara Falls. And money was put in the ground. I was an investor in that project. I pointed out to the legislature, I said, look what happened here. We brought in hundreds of millions of dollars to build this, one of the world's largest data centers, and as policy got wonky and unstable and they started attacking Bitcoin miners, we simply moved it to Norway with all the money, all the jobs, all the technology, all the opportunity, gone from New York City.
With the recent collapse of Celsius, Voyager, and Terra Luna, people lost billions of dollars. This goes to show the importance of regulation, as it could have been avoided if there were proper policies that regulated the market. Hence, it is no surprise that the SEC has put Bitcoin regulation on top of its priority list.
You're correct. I mean, it's not that I'm just watching this policy. I'm going to Washington. I'm banging down the doors where I can. I'm taking meetings with every senator or congressman or woman that'll listen. I'm just one of those private investors that are going to the Hill and saying, look, here's why this has merit. Now, the real potential, we're kind of stuck in a range on Bitcoin right now with 23,000. Big miners are making coin, getting awarded coin around 7,000. So the economics are still there to put money in the ground. But the big opportunity, the mega opportunity for Bitcoin, and why I stay long and why I continue to allocate to Bitcoin, is when we get policy and institutions can allocate to it, sovereign wealth and pension institutions, they'll probably put 50 basis points, which is half of 1%, up to 1% into Bitcoin, and that's where you're going to break out of this range. How high? Nobody knows, because the demand is almost insatiable. Most large institutions want a position in crypto, and they want the granddaddy crypto. They want Bitcoin. They can't buy it yet. So for all of the excitement when we talk about institutional buyers, I'm also in the indexing business. I service the institutions and the sovereign funds with indexing, and they all tell me they want to index for Bitcoin, but they can't buy it. They don't have any policy. They don't have any compliance infrastructure. So we got to get this done. We got to get some policy. If it's just stable coins and Bitcoin, just those two asset classes, that's a huge win for everybody that's involved in crypto.
The reason why Kevin wants crypto to be regulated is because huge institutions are hesitant to put their money into crypto because there is no proper policy infrastructure. As soon as the SEC lays out clear guidelines, sovereign funds and pension funds will allocate at least 0.5% to 1%, which will be huge for the entire crypto space. This will likely take Bitcoin to new all-time highs.
But when it comes to Bitcoin, the floodgates themselves is compliance infrastructure at the sovereign fund level, the Norway fund, the Saudis, the United Arab Emirates, our own states, pension plans. If we were calling that asset, whatever we're going to call it, a commodity or a security, and we got that done, I don't care which direction it goes, why wouldn't you be allocating to any portfolio a portion to Bitcoin, just like you would for real estate, just like you would for stocks, just like you would for bonds? That would really change the dynamic on Bitcoin. And when that happens, you have to make a decision. Do you get ahead of that curve, not knowing when that actually is going to occur? or do you wait until it occurs? Because it'll be, in terms of price appreciation, I believe it'll be dramatic. It'll be dramatic. You could have a gap up 10, 15, 20, 25% overnight because you've opened up trillions of dollars worth of access to a new asset class. That doesn't happen too often. And I think all of the productivity and all of the people that are working on the blockchain and all the projects out there, and I always remind people, Bitcoin is not a coin, it's software. There's lots of really smart guys leaving colleges that are engineering and moving to the United Arab Emirates or the Caribbean islands. They don't stay stateside because they don't have any policy. So all that intellectual capital could come back stateside. There'll be a lot of things happening once we get policy, once we get regulation.
Kevin says there's no reason why institutions will not allocate a small portion of their portfolio to Bitcoin like they do to stocks, bonds, and real estate. He believes once Bitcoin is regulated, we will see a massive pump overnight, and it will be the start of a strong bull rally.
Here's how I'm playing the crypto as an investor and as an entrepreneur, because I'm looking at it saying to myself, what discipline worked for me for 30 years in stocks and bonds and traditional assets? And that was the rule of diversification. And a lot of people say to me, I only need to own Bitcoin. I get that. That is the granddaddy asset. But it doesn't mean you can't own anything else. I think the opportunity is to get diversification and make sure that you have a plethora of different opportunities. I think crypto itself is a brand new sector. We talked about that earlier. So I'm a big believer in NFTs. I'm a big believer in the other projects, other payment systems. That's why I bought a piece of Circle. I mean, it's sort of like, give me diversification. But the asset that I want to get regulated first, it's gotta be Bitcoin, because that is the one that started the whole thing off, and we've got to get policy around that. And that means as simply as allowing us in the US to have an ETF like they got in so many other places. Why are we so far behind on that? That means anybody could just, if they wanted to own some Bitcoin, could just buy the ETF, stick it in their online account, pay no fees practically for owning it. That would be the right way to do it, to broaden the market to everybody.
Even though Bitcoin adoption is on the rise, there is still a large percentage of people who are unable to buy Bitcoin due to several reasons. According to Kevin, in order to bring more people into the crypto space, a simple ETF would work wonderfully to attract more people than ever before.
Unlimited amount of capital ready to come at it when they get compliance infrastructure, when they get policy. We got to get there. I mean, it's time to get there now. It really is. Let's get there. And then everybody, if you want to own all your assets in Bitcoin, that's cool. At least you've got policy around it. If you want to have, diversity and you want some Swiss francs, you want some Bitcoin, you want some Ethereum, you want some Solana, you want some Polygon, okay too. Let the market be broad for everybody. My point is, rarely can you have stability when all your assets are in one asset class. You get a lot of vol there. But I want to have a lot in Bitcoin. When I say 20% in what I've got across crypto positions, I got 32 positions. The largest right now is Bitcoin and Ethereum.
Putting even more emphasis on his previous points, Kevin believes that there is a lot of capital sitting on the sidelines, just waiting for regulatory clearance. However, there will be a slight trade-off if this was to happen. Although it depends on the severity of regulations, it will have some effect on the decentralized nature of cryptocurrencies. Do you think we need regulations, or the crypto space is better without them? We would love to hear your thoughts. Make sure to like this video and subscribe to our channel because we upload informational content like this on a daily basis.